Hi, Dave Yelle here with Hanson Associates. I would like to take a little bit of time here today to discuss tactical asset allocation and why we believe that this strategy is the most effective strategy in today's market. One of the key components of tactical asset allocation is that it is a dynamic strategy, as opposed to the traditional static portfolios that you might find on many financial advisors using. For example, a portfolio that's 30% stocks and 70% bonds would be an example of a static portfolio where you're disseminating the risk between stocks and bonds. But in today's market, that just doesn't work anymore. It used to be traditionally stocks would move in one way, bonds would move in another way. So safety was in disseminating that risk out so that if the markets were collapsing, the bond market traditionally you would expect to go higher as people flee from stocks and move into bonds. We don't necessarily see that as the case anymore. Bonds are moving in an entirely different direction than stocks on many different days. And a lot of what has to do with the recent Fed intervention that we've seen over the past couple of years is that they've taken that static dynamic and the static asset management strategy and blown it to smithereens, in my opinion. For us, we find being tactical and being able to move into a variety of different asset classes at any given time, wherever the money is going, we want to be there. We want to participate. And that's one of the most important reasons why we've decided that tactical asset allocation is really the strategy for the next decade at least.